Are you thinking about buying a home in 2023? The most common question I get, should I buy a house in 2023? This whole video is going to be dedicated to the pros and the cons of buying a home in 2023. So ultimately, you can decide if it's right for you. All right, Matt Gouget, Matt the Mortgage Guy, residential mortgage broker, licensed in 45 states. Go to greatmortgagebroker.com, fill out the form. Me and my team will be in contact. We're more than happy to help. This is a very common question, so I want to get into it. I want to tell you not just the pros of home ownership and all the sunshine and rainbows and all the great things about owning real estate. I'm also going to tell you the cons. So ultimately, you can decide, because at the end of the day, I can't give blanket advice on real estate, on mortgage, on just about anything. Everybody's unique scenario is so different. And trust me, me and my team deal with all kinds of different scenarios. So take information you can gather, figure out your specific scenario, your current situation in your job, your finances, and all that stuff. And you decide for yourself is ultimately what you want to do. So let's talk about the pros and the cons. I was going to start with the pros, but everybody expects all the pros from me. Because I'm a mortgage broker, I'm only going to say that it's always a great time to buy and that real estate is the greatest thing since sliced bread, which, by the way, I think real estate's pretty awesome, but there are some cons, right? And I realize that. So current environment, rates are higher, right? And that's a big con. Affordability. It's expensive on a monthly basis, which that's the metric that most of you are going to look at, as you should. What's a monthly payment that fits into your budget? One of the biggest current cons, higher interest rate, makes for a higher mortgage payment. And I'll show you an example too, because some people, if they have no idea, just have no true idea of how expensive it is to buy right now. So let's use an example where you got a little bit of credit or you decide to spend your own money to buy down the interest rate to a 5.99. It would cost a little bit of money depending on credit score, depending on down payment, depending on property type, all that stuff. But 5.999 is the rate I'm using in this scenario. And I'm looking at a $500,000 purchase with 10% down or 20% down. Here it is. On this left-hand side, I love examples because I think it helps people. 500K purchase, 10% down, 5.99 interest rate. We've got principal and interest, $26.98, mortgage insurance, $79 a month, property taxes, $521, and then homeowners insurance of $79 a month. All in payment, principal, interest, taxes, insurance, the whole kit and caboodle, $33.76 a month. When you factor in title fees, appraisal, prepaid taxes, insurance, all that, plus your 10% down, it's probably going to be $63,000-ish out of pocket, right? So both of these, to be quite honest, are hurdles for people. The down payment funds and then the monthly payment of $33.76. If you happen to have funds or have a gift or have the ability to do 20% down, you've still got a pretty hefty mortgage payment, $29.98 for buying a $500,000 house. In some areas, this might be a mansion, right? In California, where I'm at, in Sacramento, that's an entry-level house in a decent neighborhood, right? $3,000 a month. That's not a small payment, right? So I understand this con. Another con for buying in 2023 is we've seen massive appreciation in the last 24 to 36 months. So homes are expensive. If you look at the data, you actually can see 10, 12, 15% decrease since May of last year. Sure, the year-over-year numbers just came out, and February to February is down 1.2%. But that's looking at February 22 versus February of 23. It ran up into the summer, which it does, right? It's seasonal. In real estate, the median price increases during the summer peak buying season, and then it comes down. It does that every single year. But still, from that peak to now, we're down about 15%, but it's still expensive. I can't believe it's been 36 months since the world shut down and all that stuff happened in March of 2020. But here we are, March of 23, and we saw what happened with interest rates going to next to nothing. All the upward pressure on demand and real estate prices, to where real estate in some areas is 40 to 50% more expensive than it was 3 years ago. You couple that with high interest rates, it makes it tough, right? So that's the cons. Now let's get to the pros. If you're buying in 2023, because of all these cons, the market is less hot. You're competing against less people. Depending on the area, depending on the price point, this is going to vary, but this is just in general, it's going to be a lot less hot than prior years. Less hot means less competition. And less competition, if you don't remember or you weren't in the market, take my word for it, because we dealt with all kinds of crazy bidding wars. You had to remove your appraisal contingency, remove your inspection contingency, remove your loan contingency, meaning you couldn't back out of the deal without losing your earnest money deposit. Those contingencies mean until my loan gets approved, I can back out. Until my appraisal gets back and I see how much it appraised for, I can back out. Until I inspect and see that there's not $100,000 in foundation problems, I can back out of this. People had to remove those just to have their offer looked at. So as you can imagine, there's disasters. There's people that uncovered problems a year after they bought in 2021. You might be jealous of their 2.5% interest payment, but they're jealous of your ability to write an inspection contingency into your contract. So that's a good thing. That's a pro, that you're going to have less competition. You're not going to have to write as an aggressive of an offer. You know, the caveat is that there's always going to be well-priced homes in great neighborhoods at certain price points. Generally speaking, the lower the price point, the more competitive, because there's more active buyers and there's more people that are able to buy at that price point. But you're not going to see anything near the insanity levels that we saw in 2020 and 2021. Final pro that I thought about here was just there's going to be more room to negotiate. And we've seen that. We've seen seller credit. We forgot what that was for years and years. And sellers are offering 5, 10, 15,000 in credit, help buy your interest rate down, help structure mortgages comfortable for you. And so use that to your advantage. It's not available on every house in every market, but if it is, look at a 2-1 buy down. Look at a permanent buy down. Look at doing something with that seller credit to make it more affordable. I talked in a video on my buddy Zuber's channel about builder concessions. If you're buying a new build, lean on them. If they've got incentive to buy, or I'm sorry, if they are in a position where they need to sell, use that against them. Ask for everything. Don't ask for the kitchen sink. Ask for a lower mortgage payment via a buy down, via credits from the seller, whatever they can do, because there's a lot of that stuff going on. Again, it's select markets, but you might have that available to you. And you can negotiate a lot of things on the contract that just weren't negotiated before. Who's paying for title? Who's paying for closing costs? The contingency periods, don't have to be as short. They actually exist now and are on there, so you can protect yourself. If you bought a house in 2021, you paid $100,000 above ask, and you waived your right to inspect without losing your deposit, because you didn't have that contingency. People in the Bay Area found $100,000 problems after they closed on their house, and it was unfortunately too late. The other pros that I don't even need to mention about real estate are the tax benefits, the appreciation, the debt pay down. Over the course of time, you'll buy a house for $300,000. If you just get steady 3 and 4% appreciation, which over the last 70 years you're going to average, that thing is going to go up in value, by 6 figures. You're also going to pay it down. Every month you pay your mortgage payment. Some of it goes towards principal. So after 10 years, you're going to owe $227,000. Then after 20 years, you're going to owe $105,000. Then it's going to be paid off. That was just a guess and an example, but your loan balance goes down, your property value goes up, you write off some depreciation on your taxes. It's a great thing, real estate. Hopefully this was helpful. If you want to connect me and my team to get yourself pre-approved, go to greatmortgagebroker.com. If you want to connect with an agent, no matter where you're at in the country, go to homeandmoney.com/Matt. Check out my channel. I've got over 800 videos, mortgage, real estate specific. So check them out here, here, here. This one, I think you're really going to like.